Hey everybody, Tim Knight here. First, I want to thank our new premium members. They've been responding to my, call it guilt or nudging, but it always warms my heart greatly to see a premium member sign up. It's funny because oftentimes they'll be like, I've watched you for years, or I've been on the blog for years, and I finally decided, it's like, goodness gracious, what? It certainly is quite a long probation period for me to earn a premium member. But I'm grateful anyway, so thank you. And I hope there's plenty more coming. Believe me, it is always my mission in life to make the purpose of a premium membership to be more and more obvious. And I think the changes, and they will be big, coming between now and the end of the year will compel even more to join the premium ranks, because that is the only revenue that this site generates. So thank you again. Out of a combination of laziness and desire, I wanted to do a video of the indexes because I think it lends itself. I haven't done a video in a while, and I think it's high time. And don't worry, I'm not going down a crypto rabbit hole except for this one chart. And I want to, I've had a very, very profitable year with crypto. It has been a life-changing thing, an eye-opening thing. And you may have noticed I haven't bitched or whined or complained about crypto going up or down because it's a real market. And it definitely has moved directions that I'd prefer it not move, and I haven't bitched about it once because it's a real market. Markets aren't required to do what I want them to do. They're required to act, rationally and in a chart-friendly way. And crypto persistently keeps doing that. So that's why I don't gripe. I simply observe. And my observation recently, and my premium members definitely know this because I've been talking about it, has been something's changed. And we are out of the rainbow. And it has happened before, and we're on Ethereum now here. You can see I've done these four, and I love my rainbow tool. Gay or not, it's wonderful. I love my rainbow. But we have these instances where it'll have this just swoop higher, and then it will bust the rainbow. And it matters when that rainbow breaks. Like, for example, as we can see back here, as we've seen in times past, like here. And whether you couldn't care less or not about crypto at all, it still is an important part of that animal spirit asset mania that's been going on for, 12 or 13 agonizing years now. And Ethereum didn't used to have too much to do with stocks, like back here. They're kind of in a different worlds, kind of worlds of their own. But lately, goodness gracious me, they are just joined at the hip, it seems. And if we look back to the to the whole COVID thing, and it's kind of obvious why, because this trillions and trillions and trillions of fake dollars that's been just fire hosed onto everybody, mostly billionaires, has made assets very highly correlated. So, back in 2019, they still were in very separate worlds. Ethereum was doing rotten, and stocks are doing great. But starting with that magical month of February 2020, they fell in love. Look at this. Absolutely crazy. Look at that. Just joined at the hip, glued, gorilla glue, side by side. And I think that's important. I think it's worth noting as we watch the crypto space start to break down, even while stocks roll their eyes and keep prancing forward. So just something to keep in mind, because I really do think it's meaningful to note that, say Bitcoin has lost $10,000 in the span of just a few days. So I'll leave it at that. All right. Well, let's just thumb through some important indexes here. The Dow Jones Composite, still in La La Land. That crazy, this one insane day was based on Avis, for God's sake, going absolutely batty. And so that caused the transports to be crazy and therefore the composite to be crazy. But that explains that one outlier line. But there's been no particular breakdown here. Kind of a tough chart to read. I think the channeling going on in NASDAQ land is much easier to read. God willing, we will see a descent in the channel, as we've seen in the past. And we're quite lofty here. We're right near lifetime highs, but the path I think that I'm sort of tracing out here is what would be a very clean and logical trade. Some of these I'll spend like no time on really. Like the Indu, the comp pretty much covers that. I'll note in passing on the Dow that we have quite clearly broken this trend line and are remaining beneath it. We'll see if that actually teases out or not. The NASDAQ 100, very much the same story as the CompQ, in the respect that we've been channel bound for well more than a year in this instance, and are definitely on the high side of that channel. Let's normalize this a bit. I expanded the chart quite a bit earlier there for those channels, but we'll just make it regular again. Here's the S&P 100. That is the OEX, kind of the same story. Big push higher today and a couple of days ago, right near lifetime highs, but still quite lofty with respect to its longer-term channel. The Russell 2000, I thought I just undid that. Come on, reset. The Russell 2000 is in a bit of a special case, as it has been for quite some time. A tear rolls down my face when I look at a normal market back then, when we actually had nice, clean topping patterns and predictable falls. Those were the days. Anyway, back to fakery. Here, we've had this breakout above this wedge, and that remains bullish unless it can manage to break under that trend line. So nowhere close to happening at this time, but just saying. The SOX, the semiconductor index, batshit crazy, bug-eyed crazy, lifetime high. Every semiconductor stock, it seems without exception. Ambarella, Ciena, Applied Material, NVIDIA, you name it, just higher and higher and higher and higher and higher. And so that's sort of the, just as internet networking stocks back in the summer of 2000, they were the last to go. Even when it was quite clear a bear market had started, networking stocks, the Ciscos and the like, couldn't care less, just kept charging lifetime highs. Then, once they were done, everything was done. The S&P 500, of course, the number 5,000 is very much on people's minds, and I saw that Goldman, God bless him, is calling for like a 5,100 next year on the S&P. This is the same sort of sinusoidal argument that we have been channel bound, and the probable path, I think, is a repetition of what we've seen for the past year or so. This is the transports where that wacky Avis instance happened. Look at that crazy thing. In fact, I don't even know what Avis is doing right now. It's CAR, isn't it? CAR. Just take a peek just out of curiosity. Pretty much bonkers. I mean, this is the zaniest thing. This is a stock that's now almost $300, and it was measured in pennies back in 2009. It's literally gone up. Okay, my math brain has completely failed. 34 cents becoming $300 was that 300 times as much? Or worse, I don't know, 1,000? No, actually it's more like 1,000, isn't it? Yeah, okay, you can see why I stopped taking math. Jaw-dropping, absolutely. This is a freaking car rental company, for Pete's sake, but there we have it. Utilities, really nothing to say, except once again I shall let a tear run down my cheek as we look at a normal, organic market of the past. Now we have this mutant creature. I don't like making these past 10 minutes, so I think I'll just wrap it up with the old VIX here. Still battered into prepubescent state, down around 16. We are teetering above the supporting trend line, and I guess simply stated, where we've been over the past couple of years, it seems awfully cheap and prone to a rise, and let's hope that happens. All right, that's it from me. Thanks as always. Bye-bye.